Here are 10 high-paying finance jobs where you can expect to earn over $100,000 per year, with an important caveat. This list is meant to include jobs that almost anyone would be able to get into in the earlier stages of their career, or if they were switching into finance from another industry. Because of this focus on realistic expectations, we're going to ignore the most prestigious jobs in finance like private equity and hedge funds. Sure, you can earn a ton of money in either of those jobs, but there's usually a hyper-focused career path that you must have followed in your earlier days to get into either. Rather, we're going to review 10 jobs that, with the right amount of work and networking, you could be doing in the next few years. The first job on the list is corporate banking. Corporate banking or commercial banking typically refers to the decision-making process around issuing loans, giving money to corporations to fund capital projects or to buy new equipment or real estate, things like that. Working in corporate banking, you'll typically be making the decisions or supporting the decision-making process around how much money, or if any money at all, a certain lending institution should provide to a company to pursue those projects. This is an especially cool job to be able to include on a list where you can earn 6 figures a year because it is so accessible for regular people to get into. Now, it's not easy to get into, you certainly have to put in the work, but since these lending institutions are typically the major banks that you'll have heard of in your country, there are many stories of people out there who start out as bank tellers, a very entry-level job, and work their way up into kind of a managerial role at the bank, and then eventually will get into the corporate development or commercial lending side. So it's possible to make the career progression to corporate banking within one single institution. It can also be an especially interesting finance job because you could potentially hear about some really cool capital projects or new businesses or new real estate that companies or people are hoping to develop in your area. Not just that, but you'll also have a hand in deciding if those companies are going to get the money they need to pursue those projects. Number 2 on the list is equity research, which is a really desirable position for a lot of people. Equity research is a fancy way to say stock picking. So for many students coming up through universities and colleges all around the globe, they want to be doing stock research. They want to be looking into companies and deciding on if companies are a buy or a sell, and then assigning those ratings to companies. In equity research, you'll always have a qualitative part of your thesis, and that could be answering questions like, is this business a leader in its sector? Or does this business have a strong brand reputation with its customers or potential future customers? Could it be a viable company moving forward? Then there's always going to be a quantitative part of your job, and that typically involves creating discounted cash flow models, DCF models, usually in Excel. You've probably seen some of the very popular videos on YouTube where people will run DCF models on Tesla or Apple or other big tech companies out there. That is realistically what you could expect to be doing if you're working in equity research. You could work at a stock ratings company like Morningstar or Zacks Research, or you can work for a big bank and be one of the Wall Street analysts who assign buy and sell recommendations to stocks within certain sectors that they're assigned to. The term equity research can also be applied to many buy-side positions. Buy-side meaning jobs where you're actually putting people's dollars into stocks, making investment decisions. The next 3 jobs on our list are all going to be jobs within the asset management subsector of finance that so many people are very interested in. The next job on our list is a mutual fund analyst. You would be someone working on a particular mutual fund, evaluating securities, could be stocks or bonds, and then either making the decision or helping to inform the decision-making process on if that fund should invest client dollars in that security. Becoming an analyst on a mutual fund team is also fairly accessible because it's sort of common for people to get into that role from the distribution side of the mutual fund, the sales side. And becoming a salesperson for a mutual fund isn't the hardest career path to get into, so realistically you could work your way into an internal wholesaler role, support someone selling the mutual fund directly to wealth management advisors, learn a lot about a handful of the firm's mutual funds and how they compete against other mutual funds in the industry, maybe pursue something like the CFA charter, and then try to switch over to become sort of an analyst for the same funds that you've been selling for a while. I know a few people who have pursued that exact career path. Number 4 on our list is a pension fund analyst, and a lot of your daily responsibilities will be very similar to the last job that we talked about as a mutual fund analyst. In some cases, working on a pension can be, in my opinion, more boring because many pensions have liability obligations they need to meet. So there's a certain laddered structure to the securities that the pension invests in that have to get the pension a certain amount of money on certain dates into the future. So in some cases, you can be a bit more limited to how you invest the fund's money. In other cases, they can be even more exciting if you're talking about the 5 to 10% of the pension portfolio that can get allocated to alternative investments, maybe hedge funds or private equity. You might end up doing a lot of work evaluating different private equity and hedge fund deals that you could plug the pension fund's money into, and that can be really interesting work, certainly pays well. Plus, when you're working on a pension fund, you'll sometimes have a slightly closer connection to the people who you're investing for For example, you could be working on the pension for the New York City Fire Department pension plan. You know that all the money you're investing and all the investment growth that you're shooting for is to directly help fund the retirement for all New York City's retired firefighters from the past. That can be a pretty rewarding feeling. Number 5 on our list, and the third asset management type job that we're talking about, is private wealth management or financial advising. Many of you know that this is the job I do. I have several videos on the channel discussing this in detail, so I'm not going to spend a lot of time describing the responsibilities of somebody working in private wealth management. It's a perfect example for this list. It's a job that's pretty accessible. You can find very straightforward entry-level ways to get into this field, and if you do the right networking and you're a very valuable employee, it's not too difficult to be earning 6 figures within a few years, 4 or 5 years into the job. There are probably 2 ways you can think about private wealth management. Number 1 would be as an analyst for maybe an RIA, and you manage $1 billion of client portfolios, and for every moderate client, their money gets invested into a certain model. You work on deciding what ETFs or mutual funds or stocks go into that model. For every moderate aggressive investor, their money goes into this model. You design that model as well. Then in PWM, you have the more traditional financial advisor role, where you're the client-facing individual talking to people about their portfolios, their financial plans, making recommendations, things like that. The next job on our list is doing credit ratings, which typically is looking at loans issued by companies or governments and assigning a credit quality to those loans. You can think of credit rating as sort of the fixed income version of the equity research job we talked about earlier. Equity research deals with stocks, credit rating or fixed income ratings deals with bonds. It could also be similar to equity research in the firms that you work for. You're either going to work for a bank or a research institution that sells research to its subscribers about certain fixed income issuances and what credit quality you assign to those bonds. If you're doing credit ratings on government bonds, you probably have what I would consider to be the single most boring job on everything in this entire list, but it's a very important job to have. There's the famous scene from the Michael Lewis film, The Big Short, which describes how the 2008-2009 financial crisis happened, and the credit rating agencies, S&P and Moody's in the United States, were assigning AAA credit ratings, which is the highest credit quality rating, to many mortgage-backed securities in which they knew that the borrowers of the loans were not in strong financial standing. There was a huge conflict of interest, which is why these credit rating agencies were giving those bonds AAA ratings. But if they would have given them fair junk bond ratings, then many people could have saved a lot of money. We may have avoided a big part of the financial crisis that happened back then. Number 7 on our list is sales or distributions, basically being a salesperson for a certain fund to get people to invest their money into it. I talked a little bit about this one as it relates to mutual fund salespeople, which are called wholesalers, a bit earlier in the video. As an internal wholesaler, you're basically providing research to advisors or other asset allocators who would potentially be putting client dollars in your funds. You could also be a sales or distribution person for a private equity offering, a hedge fund, things that you might consider to be more interesting than a traditional mutual fund, but each of the jobs is going to work basically the same way. Most sales or distribution jobs are going to have a commission-based compensation structure. Now, I think pretty realistically, you're going to be making 6 figures, and I've heard of the most successful mutual fund wholesalers in like New York City making $500,000 or $600,000 a year, just calling financial advisors and going to their offices every once in a while and saying, hey, you should put your clients' money into my fund. Number 8 on our list is consulting. And I have to say, I was a bit hesitant to include this one on this list of realistic finance jobs. The reason I say that is because consulting can be pretty difficult to get into, sort of like investment banking, private equity, hedge funds, etc. If you're thinking of doing consulting with any of the big 4 accounting firms, EY, PwC, whatever, you probably need a really high pedigree background at your university, maybe a high MBA, and then some very competitive work experience in your first couple years outside of college. However, there are many consulting firms out there that are just looking for creative people who are great communicators with good ideas. And if you can network yourself well with someone in those types of positions, you can certainly find yourself on a very small but effective and highly compensated team, or even potentially with one of those bigger firms that I mentioned. You're just going to have to impress the managing directors or partners who are hiring you. Consulting can be a really cool role. You get to offer advice to many different companies and corporations. You get to look at a lot of the internal struggles that some of these companies are dealing with that nobody else would ever see and help them try to solve those problems. You probably do have to deal with a lot of corporate fluff in consulting jobs though. There's some funny memes out there on the internet that make fun of that fact, so it's not exactly the job for me. Number 9, getting close to the end of our list here, is corporate finance, which really refers to making financial decisions within a non-financially related company. Think of Nike or maybe any other clothes or sporting goods manufacturer. They're going to look at their sales, their margins, their product lines, which locations are selling different product lines better than others. So as a corporate financial analyst, maybe you'll try to calculate the IRR of a certain project in a certain location, or do some cost benefit analysis on manufacturing a good in one area versus another, and then make your recommendation to a management team around how the company should structure some of its internal dealings to increase profit margins. Corporate finance is probably the only role on this list where you could really focus on one specific company for like an entire 30-year career. So if that's something that's interesting to you, this could be a way to go. Last, but certainly not least, the number 10 best finance job for realistically making $100,000 per year is just to subscribe to Straight Talks here on YouTube and watch all the videos literally every day. Because I'm so smart and I'm such a valuable wealth of knowledge, if you don't worry about having a regular 9-to-5 job, but instead you spend all your waking hours watching every video I've uploaded to this channel, and also watch all the new ones that will be uploaded in the future, make sure you're subscribed to see those coming up, you're gonna absorb so much valuable information that money is just gonna start coming at you from left and right. You're really not gonna have to do that much. Work smarter, not harder. Spend your days watching this YouTube channel and you'll be guaranteed to rake in 6 figures without having to move a muscle. It's probably the most foolproof job on this entire list, so go ahead and make sure you're subscribed. Don't forget to like this video and every video that's ever been uploaded in the past. You'll be guaranteed superior returns in the future for doing that. As always, thanks for watching.